What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down what's going on with Tesla's latest deliveries report that just came out, why this actually led Tesla to crash, and what you should watch for in the future for Tesla's stock based off the data that just came out. I'm also going to break down what's going on with the overall market as we have some very important information and also more data for Tesla's stock. Now, before I break anything down about the share price, before I give you guys my price predictions and actually break down what on earth the data tells us about Q1 for this year, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends tomorrow. It has been extended for just one more day. This is your last chance to get those 12 free stocks from this offer. With that out of the way, let's get on with the video. Tesla's down 12% for the day. And in my previous videos, I mentioned to everyone that, look, Tesla had a lot of potential. Because when you look at how the share price was essentially moving, uh, when you look at it, if Tesla's report was good and Tesla did very, very well, they beat expectations, Tesla would break, or it had the potential to break this level, this 125 area, this zone. And in that case, it could have squeezed pretty hard to the upside. This could have even helped bring the market up a bit. But, but what ended up happening was Tesla missed. They missed deliveries expectations, and unfortunately, it was by some margin. They did not do well in terms of deliveries overall, if I'm going to be honest with anyone, but their production was still pretty good despite that. And I mentioned to everyone that, like, if we broke below this area right here, and we saw Tesla actually break below 117, it had potential to actually come tumbling down pretty hard, back down to this 110 to 108 area, maybe even lower. And that's what ended up happening. And the zone I was watching for was this gap area right around here. Gap support was around 104.47, right? We ended up actually falling to 104.65, bouncing right above it, just barely above it before a bit of a bounce. And what's not good about Tesla is we dropped pretty hard. Obviously, the RSI was oversold on these smaller time frames. We get a nice bounce, small push to the upside, but now the RSI, excuse me, is kind of overbought, which is a sign of weakness. Not the best of things to be looking at on these smaller time frames, right? And I'm not just going to look at the RSI, obviously, but my point is, it's weak. It's not looking good. And now I just want to transition into breaking down why on earth this ended up happening and what this data really tells us. So Tesla reported 1.31 million deliveries in 2022 with a growth of 40% over the last year. Now, that's actually below their 50% target, which they've been preaching for many, many years. Very unfortunate for me to actually say this, but they did end up missing on that target. They also missed on the adjusted expectations of Wall Street analysts. And the mainstream news outlets loved to rub this in. This was all over the news. They were screaming about it. And what they tend to do is they tend to whisper Tesla's achievements and they tend to scream when things like this happen. And that is what ended up happening. However, this was not necessarily a horrible report, in my opinion. And I'm going to explain exactly why. Looking at the data specifically, we have 405,000 deliveries in Q4. Not necessarily that horrible, not necessarily, I mean, obviously they missed on expectations. It was kind of like a miss. So it wasn't great. This part was not great, but overall, this part, and that's what I was trying to say, this part was actually not bad. The production of Q4 was not that bad. And when you consider that annual deliveries were 1.31 million with production at 1.37 million, That's actually pretty impressive because you have to remember we had lockdowns in China that lasted many months. We had these supply chain constraints that were out of Tesla's control. Elon Musk was constantly talking about that. And despite the hardships, they achieved, and this article is not actually showing it for some weird reason. I'm not actually seeing the number. They actually achieved almost 50% growth year over year for production. It was actually 47%, almost 50%. Production was pretty impressive. Deliveries were a little off, and in my opinion, it's not the end of the world. I mean, production was impressive, but it is showing some weakness on the demand side. It is showing some weakness here and there. So analysts lowered their expectations. They gave a massive range, right? And we saw lots of expectations between 409,000 to 433,000. Tesla only gave us 405,000 deliveries. On their official website, we can see the data right here. We actually had 47% growth year over year for the production side. 40% growth year over year for deliveries. So a little bit off of the expectations and their goals. Right here, we could see the Model 3 and Model Y were the two most popular models that they had for deliveries and production. Very, very popular, very, very huge for them. And right over here for 2022 in total, it was once again the 3 and the Y, putting our total at 1.37 million production, 1.3 million in deliveries. So, in my opinion, what do I think of this? I think two things. First off, I'm still impressed by the production of this company. They had the new gigafactories. They're working very hard on ramping up production and making them their means of production even more efficient. And I think they did well. Okay, 47% growth year over year on production, which is right here. That's not bad. That is not bad. That's almost 50%. Great job, team. However, deliveries are where they missed, and they missed by some margin. 40% growth is not at that 50% mark. But the problem with Tesla is the expectations just go through the roof. And even if they achieve something excuse me, it's not looked that way. They still gave us 40% growth despite the hardships in their way, despite all of the things going on in China, despite all of the logistical issues and so on and so forth. I'm still impressed by the company, I'll say that much. And we can see it's all over the news. Obviously, they have to rub it in. It's all over the place. And Tesla missed on a lot of these targets. It's okay though. I mean, there were lots of significant challenges, and many people are now talking about the significant demand problem. And many investors that are saying many of them underestimated the magnitude of the demand challenges that Tesla is facing. Many analysts are now changing their opinions, and this is leading to lots and lots of capitulation. But it could get worse under certain circumstances. Additionally, the market did take a bit of a hit. This did somewhat contribute to Tesla, and that's because of the fact that Apple ended up reporting that many of their product orders are being cut in Asia, once again, signifying more and more, less and less demand and more fear for investors. Not the best of things. Now, could the market actually kind of like squeeze in response to this for the end of the week? In order for the market to get a bit of a rebound this week, it's going to depend on data. We have the FOMC minutes coming out tomorrow. There is a possibility that this can actually help the market a little bit, maybe not too much. But then the big thing is going to be Thursday. Jobless claims are going to be coming out, and it's very possible that this could actually show another increase. And if it is actually at or even higher than the expectations, there's a good chance the market could actually bounce a little bit to end this week. Right? Do I think it's going to be a massive bounce? No. But if you consider the fact that we touched 386 today, there is still some potential for the collective market. For Tesla, however, it looks not the best. I know this data is not updated, but I expect a big drop in the price pairs ratio. Once again, more weakness for Tesla relative to the markets. Another big drop for Tesla. Once again, underperforming compared to the markets. Despite that, Goldman Sachs is giving Tesla a buy rating. They're telling everyone, buy Tesla. Tesla's still awesome. It has so much potential. And I agree. I 100% agree. Not financial advice, by the way. And what else is interesting is what I'm essentially seeing is I think Q1 is going to be tough for the share price, for investors, because of the data that's going to come out. Their earnings may not be the best when they come out, and the demand shift, the demand challenges are yet being exposed because of the fact that when the Fed raises rates, it does not immediately affect the market. It takes a while for the rate hikes to actually sink in. So we're just barely getting started with the pain. 2023 will be painful. Now, historically, we're read about 52% of the time on Wednesdays for Tesla. Please watch that very carefully. And with this high short interest, this tells me two things. If the shorts keep piling in, this could cause some short term pain, some medium term pain. But for the longer term, when this thing bounces, it's going to squeeze even harder. So maybe they bring Tesla down lower, but Tesla will rebound even harder as time goes on, thanks to the higher short interest. That does play a role, believe it or not. So, anyways, let's now hop onto the technical side of what is going on with the market. Starting off with Apple, this is what actually dragged the market today. Apple actually got rejected off this 130 level, came down pretty hard today after the news that came out, and then Apple just came down pretty hard, down almost 4%. However, it did try to bounce a little bit. It is trying to hold this zone. Now, the thing about Apple is we have to watch 122 and 124 ish. If this thing holds 124, there is a chance it bounces there. If not, if it breaks 124, 122 could come, bringing the market down again, but then we could bounce off there. So watch that very carefully on Apple. For SPY, we're basically just trading sideways. I can actually bring up the 30-minute real quick. I know this is kind of messy. I apologize for that. We did actually have a potentially keen bullish divergence on the 1 hour. I remember actually talking about this. There is a possibility the market might continue to push up. We actually closed above 380, but we have this gap here. So what could happen is we might come down to fill this gap. If we bounce, because we have to bounce for any hope for the bulls, then we could actually continue to make it back into this above the 382.3 shop area. We could actually break above that and see 383 if we actually fill this gap and bounce. But if we fill this gap and we break below 377, we see 376, and we fail to hold this area, it's not going to be pretty. We'd have to bounce off 374. If we fail there, it's not going to be good. Okay, SPY could still knife. And if that happens, it's going to be worse for Tesla. But right now, I like the fact that we saw some buyers coming near the end of the day and we closed above 380. There is a chance we're just going to continue to range trade. Maybe we come down to fill the gap and we just range trade back and forth, but eventually we actually break a little bit to the upside if the jobs report causes that. That still is a possibility. All right. For the QQQ, and I'm just going to quickly go over these now. QQQ is also being tracked by both Tesla and Apple. If Apple comes down pretty hard again to 122, we could see this actually go for the gap fill and then bounce. If not, if it's already done with the drop, we have a double bottom like formation. This thing could actually push back to 266 and then retest 270. Finally, let's actually talk about the dollar index. This thing is down. It still is. It's been on this downtrend. It is still in very, very close to this demand zone. I expect this thing to start like pushing to the upside very soon, maybe within the next like week or two, and that's when I expect the market to start crashing within 2 weeks or so. But until then, it's still kind of like hanging out around this very, very low level. That's a sign that the market might actually hold up a little bit, maybe push up just a little bit before the big drop to come. There is still potential for that. On the VIX, notice this. Notice how we have a long wick above the body right here on this candle. This is basically indicating that, look, the VIX gapped up, it pushed up, but now it's starting to come down a bit. So now I'm wondering if the VIX breaks below one of the key support zones, 22.64, the market might start pushing up because we have this big gap on the VIX now. Could we go for the gap fill? If it does, the market might start to squeeze. So watch that very carefully. 10-year treasury yield. This thing has another gap. It is starting to come down a bit. I did mention this as a possibility in one of my earlier videos. It could come down a little more. It is still very possible. That could be another bullish indication for the markets. So, anyways, enough about the other stocks. Let's get on with Tesla. What the heck is going on? All right. Unfortunately, Tesla is extremely weak on the smaller time frames. It was oversold when it started dropping. It remained in this zone right here. And then what happened was it started pushing up right off this 104 bounce. And then it quickly became overbought. That's a sign of weakness because only a small move to the upside makes it overbought and a big drop makes it oversold. Think about that. It's not the best of signs. And we know when the deliveries report comes out like that, not the best of things for its performance. The key zone I'm watching for, all right, I'm not saying that this has to happen immediately, but there's a gap between 104.47 and 103.74. This gap was actually created back in 2020, I believe, or like around there. So if Tesla comes down and if we do end up failing around the support zone around 104.65, we could go for this gap fill and we may even break below it. Okay. And the thing is, this 104.65 levels where we balance very close to the gap support around this 104.47 area. On Tesla, I'm going to be watching if we do go for this gap fill, which I think we could do it pretty soon. 100, 100. It's very simple. That's the most simple zone. It's going to be critical because if Tesla comes down and tests 100, it has to bounce. It has to see the buyers. If the buyers don't come and this thing crashes, it is not going to be pretty. If this thing breaks below 100, lots and lots of investors will capitulate. You're going to panic, and this thing is going to come crashing down, guys. All right? I did not want to talk about this. I did not want to mention this. But that is what will most likely happen if it breaks below 100. Could we test 100 soon? Yes. So far, Tesla's underperforming. It's looking weak. Doesn't look too good. Tomorrow, I wouldn't be surprised if we kind of chop around a bit. Maybe we try to push up and test 110, but I do expect this thing to come back down to 104 very, very soon and go for this gap fill around this 103 area, maybe as soon as tomorrow. And could we come down to 100 as soon as tomorrow? It is possible, but I don't want to really call that just yet. It may take a little bit longer for us to actually get down there, but who knows? I mean, it could still happen, especially when people are panicking. If it happens tomorrow, watch this carefully because if it breaks 100, there's going to be a lot of room for downside. Okay, so be very, very careful around there. All right, we can see this thing hitting 90 like pretty quickly. It could just start falling like a rock down a cliff. So be very, very careful. Anyways, I want to just inform everyone I'm not scared. I'm not worried, as I mentioned in my previous videos, because if this thing breaks, I don't know, if it stays at 108, if it stays at 104, if it breaks below 100, I don't really care where it is because I know this is a very good buying opportunity to dollar cost average. If you buy at 108, you buy more at 104, you buy more at 100. If it breaks below 100, then you have the 90s to buy in, the 80s. There's so many areas that are incredible, incredible buy zones for Tesla. The all-time high is over 400. I just see this as a Black Friday sell. I'm not worried whatsoever. I'm still very bullish on Tesla, and that was not financial advice, by the way. I'm still, excuse me, I'm still very, very bullish on Tesla. I think they're an absolutely incredible company. By the time we get to Q2 of 2023, I expect them to start showing big signs of improvement. But until then, there's likely going to be some pain. So please be prepared, remain calm, cool, and collected, and I'll see you guys in the next one. Tesla's at the moon because the long-term future is still incredibly bright as we have the Cybertruck coming. We have some major catalysts, and I'm still very excited for Tesla's future. We have AI, we have the full self-driving technology, and so many big catalysts that will help the share price in the future, as I'm still very bullish. Thank you, and peace out.